All right. Welcome to the BDSA webinar on our legal cannabis forecast update as of February 2022. My name is Micah Tapman. I'm the CEO of BDSA and really happy to have a nice audience joining us. We're going to give just a couple of seconds here, about 30 seconds or so, until we officially kick things off as people sort of funnel in. Just covering a little bit of where we are today. We are making this update to our forecast coming towards the end of COVID. It's been a very interesting couple of years with the COVID pandemic causing all sorts of disruptions around the globe. Some of those disruptions have been positive for the cannabis industry in certain ways, and some have been negative. So we've seen ups and downs across the supply chain. We've seen, for example, a surge in delivery and different fulfillment methods, pre-order systems doing really well. And all of that is impacting how we look at our forecast and what we're thinking about happening in the near term, the intermediate term, and the long term. So we'll be talking a little bit about each of those things. And as we look through this deck and I talk through some of the key points, feel free to ask questions. We will be interrupting occasionally with questions that are particularly relevant for that particular area. So feel free, again, type in any questions that you may have to the webinar system. And we've got our team monitoring and we'll interrupt to answer questions. So don't feel like you need to hold them till the end. I actually do quite well with the interruptions because it keeps me on my toes. So without further ado, we're going to go ahead and get kicked off. Diving into this February 22 market forecast update. All right, so the agenda, we're going to be going key takeaways and updates on the newest forecast. We're going to be diving in on the US, Canada, and international markets and just touch briefly on some resources. So the key takeaways, three big ones, and I like to go in reverse order sometimes. So international growth, Germany and Mexico actually getting off of the fence and moving things forward. That's going to have a huge impact on those international numbers. We're going to be seeing a lot of activity related to that. Canada is actually growing quite well. It is being dominated by Ontario, as is normal for the Canadian market. But those 2.0 products really are starting to take off, and we'll see that as we look at the category breakout. And of course, the US. The growth of cannabis in the US continues. It is still very, very relevant. It is still very big and very much the major aspect of our forecast overall. So jumping in now, my colleague Michael is going to speak just a little bit on our methodology and how we actually make this 5-year rolling forecast. Michael?
Hello, everybody. My name is Michael Arrington. So this little chart here is just a rough diagram to show sort of the inputs that go into our legal cannabis forecast model. We have a number of quantitative inputs, our own retail sales tracking in a number of states. They're listed there, as well as our partner retail sales tracking in Canada, looking into the adult use channel in Canada, and then other data available from various local, state level governments, national level governments in the case of Canada, and some European and other global markets. And then we have a sort of qualitative inputs. This is where we look at everything that we see going on in our own consumer insights data about consumers' attitudes, preferences, need states, and at the regulatory level, both from municipal all the way up to state and national levels. So what kinds of things are available, how do we see things changing, et cetera. All of these feed in to a model that looks at by channel, a total of 55 US markets, 13 Canadian markets, and globally 30 plus markets with medical, adult use, and illicit channels where available. We have product category breakdowns in Canada and the US, and each of these markets, we also rely on a lot of other statistics for market sizing, et cetera, population, legal adults, et cetera. I think that's it, Micah.
All right, thanks, Michael. Really appreciate that. So without further ado, we'll jump in to the details here. And I'll actually drop my video so we can focus on the slides. All right. So looking at total global sales, that is the next thing that we're going to be diving into. So again, starting at the end, 61 billion is where we're thinking it's going to be in 2026, 5 years out. So as we look at how we get to that amount, you can look at the different categories or different geographies, I should say, for this. The US medical and US adult use represent the bulk of that dollar figure. We also have medical up in Canada and adult use up in Canada. You'll notice that adult use in Canada is by far the larger category or channel of sales in Canada, and we'll speak more to how we see the Canadian medical market in particular developing and actually seeing some shrinkage in that particular market. International medical and international adult use as the last two. And we are starting to really see very good growth in that international market on the horizon. To date, it has been essentially hype and not a lot of reality behind those international markets, as anybody who's invested in like the European market has unfortunately been the recipient of that. When we look at contribution, these charts are some of my favorites, by the way. I just love how representative they are of the underlying data. And we start to call out where this growth really actually is occurring. And again, starting towards the end, we start seeing things like British Columbia showing up as a small but still top 10 contributor to growth. Right? We've got states like Michigan in the US, and of course, Ontario as one of those major provinces up in Canada. Right at the front, though, we do see Germany. Like I mentioned before in that previous slide, we do see international growth actually on the horizon. And Germany, being both a very, very large country and potentially also a very wealthy country, has the potential to make up that 2.9 billion contribution. Now, one of the most interesting points about this slide that I think debunks a common myth that I hear in the cannabis industry and in the investment community is that 2.8 billion attributed to California. That is still a huge amount of growth occurring in California as California continues its dominance as the largest single market in the cannabis ecosystem. And that's something that is not going away over the next 5 years. Two things we'll talk more about here are New York and New Jersey. Those East Coast states contribute a significant amount between the two of them. And while it doesn't show up here, they also drag along a couple other states in that area. Connecticut is not going to show up on the top 10 list, but will obviously be pulled along by New York and New Jersey. Pennsylvania as well could also get dragged along with adult use in that particular way.
Hey, Micah.
Yes.
This is Michael. We have a couple of questions I'd like to address. One from Justin Kahn, who asks, are we tracking any form of illegal sales in the US and Canada? And yes, we have modeled illicit sales for all markets that we're currently modeling. And then the other one is, what is the huge change in numbers that we're going to see based on Germany getting off the fence? When is that expected to occur? From Deepak Anand, hopefully I said your name correctly. We are expecting, if you take a look at the recent news, Germany seems to be moving toward trying to get some adult regulations in place. It actually looks pretty positive, some of the commentary that we're hearing from locals. So we have tentatively placed that launch in 2024.
Awesome. Thank you very much, Michael. And good example for everybody. You can definitely ask questions and we will pause and do our best to answer them as we go. All right, jumping into the US. So looking at the 2021 recap, we definitely have seen some weakness in US legal markets in Q3 and Q4 of 2021. This was a really interesting development that we were seeing in the data. And again, when we go back to that methodology, one of the real interesting points for BDSA's data is we are collecting real data from retailers at the point of sale. So we actually see what is transacting. And we're watching that, and we saw this softening of the markets that occurred later in 2021. Now, we don't know exactly why that happened. However, we do have some hypotheses about it. And of course, we all know that inflation was starting to pick up in 2021. The pandemic was changing. We had the Omicron virus variant come to light. And of course, we also had the end of stimulus monies. A lot of the benefits that were set up by states and the federal government in the US came to an end towards the end of 2021. So all of those could have had some impact on sales in Q3 and Q4. Now, going against that trend, we saw really tremendous growth in certain markets. The most surprising for some of us was Missouri, hitting over 200 million of sales with a medical-only market. Who knew the Show Me state was so excited about cannabis sales? Michigan really took off finally. I think a lot of people had been waiting for Michigan to really boom, and it did, up over 150% and north of 1.3 billion in sales. So really, really exciting to see Michigan finally make that move into the major market category. And Illinois really boomed again. It was a huge year for Illinois on top of a strong year the year before. So up 70% to 1.8 billion. Now, why did these markets do so well, and what were the common characteristics? It's a bit interesting to look at this, and sometimes it is really hard to see within the data what are the underlying causes. Illinois certainly solved some supply side issues, supply constraints. Michigan figured out some regulatory issues and licensing matters. And Missouri had a very well organized collective of cannabis professionals and cannabis companies that actually, it seemed like, had a very organized launch. Obviously, if you were in the Missouri market, it probably didn't feel organized, but from the outside looking in, it was better than many and really showed a pretty well structured launch compared to some other markets out there.
Hey,
All
Michael,
right.
quick question, if we could, from Matthew Warnke. What is the contribution of pricing softness to overall market dynamics?
Yeah, so ARP is definitely something that we are constantly looking at, ARP being average retail price for different products. We have seen some price compression occurring across markets. It does vary depending on the market and depending on the category within that particular market. So for example, one of the areas that was very well publicized was the price of flower in California sort of dropping off a cliff. And that very much translates to a softening of the overall market. Units will stay very strong, but ARP will drop, and that will drop total sales. So depending how you measure that, you could either see that as a softening, the way we are talking about it, because we look at it from a dollars first perspective, or you could see strength because units will stay the same or even go up a bit. And we have seen that price compression across those markets. And when a market launches, supply constraints are usually very, very common, as Illinois indicated or really experienced. What happens there is cultivation is a multi-month process, and cultivators will typically take somewhere between 4 and 5 months to bring a harvest all the way to market. When a market launches for the first time, those cultivators need to get set up, they need to figure out their business processes, etc. And if we think about this, the biomass that they're producing in that cultivation facility, it is the core input for flower, of course, but also for all of the concentrates, which go into both concentrates themselves and into edibles. And so without that flower, you're going to see constraints on the supply side that drive up pricing. Because you can't transfer THC products across state lines, you must wait for the biomass to be available, and then you have to pay that market price in each of these markets. That is absolutely something that gets worked out over the first couple of years that a market is coming online. Depending how robust the market is before let's say adult use takes place, you may see a faster or slower maturation of the market. Some of the reasons for that are skilled workers. So if you have a robust medical market, let's say Arizona, then when they transition to adult use, those skilled workers from the medical market can transition over to adult use facilities very quickly. Other markets may have fewer skilled workers available for the cultivation and even the concentrates extraction manufacturers. And so they maybe are trying to find those people out of state and bring them in state, etc. So those are all impacts that directly hit the wholesale market, and that translates through to the retail pricing.
Quick follow-on to that, Micah, from John Watson in what I assume is lovely Barbados. Which states are we seeing the most price compression in? You mentioned California, but want to put a couple more in the top?
So I'm not sure, Michael, if you've got any data handy on that. I don't have a list of the most compressed areas.
I do not have a handy list. I would suggest that Nevada is probably up there.
And I know Massachusetts also has seen dramatic price compression compared to where it was on the wholesale market in particular as more cultivations come online. Colorado's certainly been impacted, Oregon as well, and it really depends on which category you're looking at. Again, talking about this, if you think raw cultivation, that is essentially how many plants can be cultivated in that particular market, but it also translates over to the extraction labs. And the extraction facilities, depending on the type of extraction, if you're using, let's say, CO2 extraction, how many CO2 extraction facilities are operating in a state will then impact, of course, how much concentrate can be produced. The same goes for live resin versus live rosin and all of those different methodologies. And that really has a significant impact in the different categories. All right, jumping forward. So key takeaways for the US. Adult use markets will be driving US growth. This is self-evident as we look at the data. The medical markets will continue to exist, and they will be relatively large compared to the global environment. But within a market, we will see adult use particularly take off compared to medical. When we look at the geography, the Northeast is finally on the rise. New York, New Jersey will be the biggest sort of piece there. Is you could argue, of course, between the Northeast versus Mid-Atlantic on that one, but we're going to see that development. That does not mean California is not relevant. California is huge and will be getting much bigger. So adding 2.8 billion over the next couple of years is really just, it's crazy to think about. That will be, it's a larger amount of growth than many other markets will be in total. So really stunning to look at what California still has in front of it. They do need to get out of their own way. And there have been a lot of hiccups with the regulations and taxes and all of that good stuff. But it will still be a massive, massive market. The Midwest is really coming into its own. Michigan, Illinois being very, very large already and will continue to get even larger. Missouri, of course, as mentioned before. The number of legal states is essentially dropping faster than we can keep track. Really, really exciting to see all of these states legalizing. Medical at a minimum, and many of them moving to adult use or on track to move into adult use. So really exciting to see that. We are not, excuse me, we are not predicting federal legalization in the next year or two. We think that there could be regulatory changes, such as safe banking, that make it easier to do business. When we say easier to do business, it really means a couple of things to the market overall. Easier to do business means that it is easier to set up a business, easier to build a business, easier to actually execute that business. And how this plays out is the pace of change within the industry. For example, if it is, like in Colorado, a very simple process to get a retail license, then you see essentially an unfettered number of retail dispensaries. Now, Colorado has been hovering around, I think it's about 500 retail dispensaries in Colorado for several years now. And that's very much the sort of equilibrium that the market has developed. You go to another state, let's say in Ohio or Florida, and that number is artificially regulated by the state. As those things start to fall, we will see faster growth in certain markets. And with federal legalization, let's say maybe coming in 2024, 2025, those states may choose to drop some of those regulatory hurdles, which right now they're still enforcing. All right, jumping into the launch dates for where we think things are going. This sort of is a summary of how we like to look at the world. Again, starting at the bottom, Arkansas, we have out there way in 2025, where we think Arkansas is finally going to come on with adult use. We also have a number that are going to be triggering in 24. Calling out some of the big ones, adult use for Pennsylvania is one of the largest movers, being one of the big states. Florida as well. Above that, we've got Ohio and New York for adult use, really big. And this is when the retail sales are starting. New York already has triggered the legalization, but they've slowed down the actual sales process. Looking on the medical side, one of the interesting things as I look through that list is seeing how many states that are not traditionally thought of as pro-cannabis are on that list. States like North Carolina or Wyoming, which might be a little bit more cautious than some other states to legalize, but we do see that on the horizon out there. And I'm seeing some questions come in. And one that I want to call out here from Justin is on federal legalization or decriminalization in the states to regulate. I think that sort of is exactly where we expect it to be, right? Is the federal government will make some ruling that is decriminalization / legalization, which basically prohibits the states from making it illegal, but they could still regulate it like they do alcohol. So you can still have a dry county, and it's not legal for a county to prohibit the consumption of alcohol per se, but they could prohibit the transport of alcohol, or they could tax the hell out of it. So those things are likely to continue. And we think for cannabis, there is a shorter period of time for that transition to a fully legal market than there was for alcohol. But we do expect to see some sort of state by state, even county by county or city by city regulatory structure for a period of time, which is, I guess, moving us further away from a laissez-faire economy, right? If we think about even what we've seen in a place like California, which has a very robust and very strong legal cannabis market, they still have a very, very complex hodgepodge of regulations by county and by city that make it very difficult to do business in California without being a real expert in the geographies. All right. Michael, any other questions that we wanted to tackle here?
Yeah, we can go off topic just a little bit to get back to Germany since we mentioned them, and this is really kind of a key change to our forecast, the addition of German adult use. As Matt Tolnick points out here in his question, Germany has 80 million population versus New York's much smaller, 20 million-ish. So just to clarify, he's asking about the timing of these markets and their relative growth to each other. So to be clear, we're currently anticipating New York starting adult use sales in early 2023, and we have their first year at about nearly 1.4 billion. And in 2026, we have them getting to about almost 2.8 billion. For Germany, we have them starting sales in 2024. We're not really anticipating a full year sales, but not specifically modeling a date. And we have their 2026 figure at just over 2.8 billion. So obviously we're not expecting quite as robust a rollout in Germany, which has not had that infrastructure. It does not currently have even the legal medical infrastructure of New York was a little peaked compared to other US medical markets. So we're expecting just a little bit slower rollout in Germany, but you're absolutely correct about the magnitude of its population, twice the size of California, and potentially, even though generally lower usage, et cetera, a very large market over time.
Great. All right. So moving right along here, legal spending for the US. And this is similar to the chart we presented earlier, but this is just for the US. So about 46 billion on the horizon for us in 2026. Really seeing strong growth in the next couple of years. It trails off a little bit with 10%, 9% growth rates, but those are still very respectable for such a large market at that point in time. One thing I want to highlight as well as we look at US legal spending, and I'll use New York as a bit of an example here, we are seeing an uptick in the number of people consuming cannabis, really I should say the percentage of the population consuming cannabis, so that is rising. We are seeing an uptick in the frequency that people are consuming cannabis, and we are seeing an uptick in the percentage of consumers who consume in more than one particular form factor, meaning let's say flower and edibles or pre-rolls and concentrates. So all of this is essentially positive news, if you will, for the cannabis industry. The consumer population is growing. The consumer population is consuming more frequently, and the consumer population is diversifying their consumption methods. So really very interesting to look at. And when we do a semi-annual consumer research panel covering about 15 to 20,000 respondents across North America. And we've been watching this trend now for 4 years. It has been very consistent, this increase in the percentage of people who are consuming and the percentage of people who are consuming more frequently and the different form factors. So it really speaks to the strength of the market overall. It is a very robust consumer population. Question that I see coming in from Justin is any correlation with criminal statistics with the increase in usage? Michael, I haven't looked at that in particular. Have you seen that in the research that the team's done?
Not as correlated to usage. We of course do a lot of looking into the illicit market via criminal statistics, but not as associated with usage now.
Yeah, and I know from just some old reading that I looked at with Colorado. Now, gosh, it's probably been 3 years or 4 years ago. They really debunked the myth that legal cannabis caused criminal activity. And we can try to dig up some of that research, Michael, if you make a note that, and we can distribute it for this group. There was some government research on what did crime statistics look like after Colorado legalized in 2012, and sort of how that's developed over the last decade. All
well,
right.
Dan, we got a quick question that might be pertaining to this slide, asking where the growth in concentrates is coming from, and if it is this slide in particular, partially that's the switch to the adult use market, but I'll let you handle the rest of it, Micah, if you like.
Yeah, that switch to adult use definitely can move up concentrates. So one of the primary reasons that concentrates will come on a little bit later, sometimes in a market, is the manufacturing facilities required to build the concentrates that then go into the final product. So setting up those facilities is a CapEx expensive proposition. You might be setting up, let's say, an extraction facility, and you need $5 million to get it up and running. And it's also going to take, let's say, 6 months or a year, 18 months to actually make it fully operational and staff it and all of those things. Versus a flower operation, which is basically 4 or 5 months of grow and curing and trimming to get it to be a saleable product. So that manufacturing is definitely a bit of a holdup and something to think about in the planning for a market. The adoption of concentrates is also one of those things that's a little bit slow sometimes. People are particularly, older people are very used to flower. We've all smoked it for many, many years. When you have concentrates, it is intimidating. It is a different form factor. The way it hits you is a bit different, all of those things. And of course, on top of all of this, if you're using a concentrate in a vape, you had the EVALI crisis, which, Michael, was that 2020? When was that? Was that 2020 or
August
19?
August 2019 through kind of the end of the year, and then we had a sales drop following that. Well, during that.
So that concentrate stuff, if it's in a vape, right, you had the heavy metal, worries. I think it was what, vitamin E acetate or something was the factor they attributed to the EVALI crisis, if I remember right. But all of these sort of health issues and wellness issues are a consideration.
Sorry, another quick add-on to this, a question about concentrates. Are vape concentrates lumped in with, or vape cartridges lumped in with concentrates? The answer to that is yes. Our concentrates category in the forecast includes vapes, dabbables, and then other concentrates, which are generally an inhalable or something like that, like a rescue inhaler. Those are lumped together here in this particular chart. They are broken out in the actual forecast.
Michael, would you take a hack at trying to define the dabbables category, just for those on the call who don't have familiarity with it?
Yeah, well, I can name them. I don't personally have a lot of experience with them, but wax, shatter, those types of products that are typically consumed using a dab rig or some perhaps electronic device. Yeah. Is that enough of an explanation?
Yeah, no, I think that's good. And what I want to clarify for people there is dabbing typically is a much higher, you're essentially vaporizing that concentrate at a much higher temperature. I think if I recall the numbers correctly, it's about 600 degrees versus if you're vaping flower, for example, you might heat it to 400 degrees to vaporize the flower. So there's a really big difference there, and the dab rigs, those electronic or whatever devices that superheat the concentrate, they are, like I said, a bit intimidating the first time you see them, and many people might not be super comfortable with them. The experience of using a dab rig and dabbing is different than smoking a joint or eating an edible, having a beverage. So, certain people really appreciate the difference in experience and really gravitate towards it. So that's, I might say, a very dedicated consumer base once you're in that dabbables category. But it is its own unique animal and quite a bit different than flower or edibles as the categories go. All right. Moving on to Canada, our northern neighbors. Canada has had a good year. It definitely finally took off. The 2.0 products really sort of got it going. And we saw 47% growth, really spectacular numbers there. The medical sales are an interesting one. They are expected to decline. They are really, essentially holding steady / declining already, and we're expecting that to continue. So it's a very interesting thing to see. What I will say, our perspective is that the medical programs that currently exist are sometimes not as medically focused as you might expect. And if adult use comes online, then many users will just gravitate to adult use because it is generally a bit simpler to purchase in the adult use category or adult use channel than it is to purchase in the medical channel. You don't need a medical card, you can go to any of the dispensaries, etc. This could see a change if the industry fragments even more into adult use, let's say wellness, and true medical. Right now, the pure medical, like treatment for actual medical conditions, there are only a handful of approved treatments on the market, and we don't really track those in the dispensary channel. So it's a little bit of a misnomer in that medical reference. And just remember to correct your thinking This is not doctors prescribing X number of milligrams of THC per day based on the kilograms of your body weight. These are people who are purchasing in the medical channel. Adult use sales, really robust in Ontario. We definitely saw dispensaries increase, so that was a huge factor of availability within that market. And then, of course, the 2.0 products, like I mentioned, really jumping in with the edibles, up to 7%. In the US, we see those typically in the teens. Edibles will often be in the teens for category share. And vapes have also done quite well in the teens as well there. Note that Quebec is its own outlier. I don't think I need to say any more on that one. Legal spending for Canada, very strong growth in the near term. That does tail off quite a bit as we look to the future, as it really starts to plateau and top out around that 6 billion mark, looking at 2024 through 2026.
And Micah, because I'm gonna pre-anticipate a question with this. We do align our Canadian data at the top line with Stats Canada and any data available from Health Canada, and we use average annual conversion rates as given by the Bank of Canada. Just if anybody is curious about local currency conversion.
Awesome, thank you. Also, I missed a question here. Was any specific metrics on percent adult use in legal states from Robert Stadwick? Yes, we do track that. We'll get into that a bit more. In legal states, we are definitely seeing, north of 50% of available consumers actually consuming, meaning adults 21 plus in an adult use state, for example. So that percentage of consumer, it is interesting to think about how you measure that. For example, is somebody a consumer because they consume twice a year? Or is somebody a consumer because they consume once a month? What about once a week? And how do you fragment those consumers? So our definition is you're a consumer if you're consuming at least twice a year. So within the last 6 months is the way we think about that. But then within that, you can actually fragment that into who's purchased versus who's consumed. You can think about this as, let's say, you're in a two-person household. One of you is the shopper at the dispensary. The other person does consume but never actually shops. So that's an interesting way to look at that data as well. And depending how you slice it, you get different numbers across the board. But we are seeing, again, numbers for consumers north of 50% in those legal states. And that is increasing every time that we look at that. So jumping in on the international market. So like I said, we're all really excited because we're finally seeing some movement from Germany and Mexico. Both of them, of course, still have a ways to go. And as Michael mentioned, the infrastructure isn't necessarily there for rapid development of the market. But we are seeing very real moves towards robust markets in both locations. So the regulations in Germany, we will see how that comes to be. Every time that a jurisdiction, in this case a nation, is trying to figure out the actual taxes and regulatory structure, they have a number of decisions in front of them that will grossly impact the actual size of the market and how quickly it will develop. And we'll just have to see with Germany where that goes. We are thinking that because it's such a big market, it'll be north of $1 billion, $1.3 billion in that first year sales. So we're really seeing, hoping to see really good sales right off the bat. Mexico, the decision in 2021 by the Supreme Court got the sort of clearance in place for adult use sales. But of course, we're seeing the regulations take some time to be developed. We're expecting 2023 to be the year that sales really take off. And even though they'll start then, we're expecting it to be a bit slower, obviously, than in Germany, with only, let's say, 150 million or so of sales there. All right. Other markets. It really, looking across other markets, we do our best to pull in all of the available data and then make our calculated forecasts for them. We're not seeing a lot of movement in a lot of other markets. That could be because of COVID and the pandemic reactions, but across the board, it's been a bit slower than many of us would have anticipated looking back, let's say 3 or 4 years. And so we have dialed back some of those expectations or forecasts for the go forward plan. All right. Oh, Michael, we got a question coming in on the Germany numbers for the medical market. Can you speak a little bit to what you've seen in the data as you've looked at that German medical market?
Yeah, so in looking at reimbursed through the government scripts as well as private scripts, so we don't have an exact number from anyone on private scripts, so we have our own estimate for that. We do have the public, the government information. Those have been trailing off. To all indications, private is up slightly, but not huge growth. So.
Perfect. Thank you.
Okay.
All right. And so again, these numbers, as we look international, so we're looking to see almost 10 billion of sales by 2026. Note the big difference on this chart versus some of the prior ones is that medical remains a very significant contributor as a channel. We've seen this pattern throughout the history of cannabis legalization, where jurisdictions are more likely to legalize medical use than adult use initially. And that's what we're reflecting here in our forecast, is that those medical use legalizations will occur a bit faster and contribute significantly, while adult use gets legalized more slowly, but eventually becomes a larger channel of sales.
One more, well, maybe a couple more questions, actually, Micah, before we move off of international. Deepak also asks, is there any reason the Israel market is not included? It is included. It's not presented here, but it is one of those 30 plus markets we mentioned that it's explicitly modeled.
Great.
And then, sorry, question from Erica Alonso for you, Micah. When diversification and population growth are shared, do you have an average frequency of use or delta to provide a sense of uptick? I don't know if you have any of that in your head.
That is available in our data, not for this webinar here, but as we look at different markets, we can dive in on the frequency, and we can do the longitudinal analysis, trending that over each of our research periods. All right, jumping in here then to the category sales changes. So looking at this, we're seeing here that there is similarity between medical and adult use categories, or channels, I should say. And this comes back actually to a point I made earlier about medical being a bit of a misnomer, right? Again, the connotation for medical, at least in the US, is that doctors are involved. Most medical regimes in the US do not require a prescription. It is just getting a medical card, and then you're qualified to make purchases under a medical regime. So I just want to be careful that everybody recognizes that difference. And that's one of the reasons that you may see some similarities with the categories in the sales there. The other one that I want to call out is concentrates. Is that definitely one of the big differences between medical and adult use. And one of the points, again, I mentioned the CapEx required to set up concentrates extraction. Medical markets tend to be a bit smaller than adult use markets. And because of that, the total addressable market for an investor or a company looking to invest in an extraction facility, it's less justifiable in a medical market than in a larger adult use market. So something to keep in mind as we're looking across these particular charts. One thing to, of course, call out is flower is very much the dominant category. That's particularly true if you think about flower plus pre-roll. So that's in these charts, this is purple plus yellow. That is really the flower category in that it's the raw flower. Pre-roll just means you're wrapping it up in a smoking paper. but otherwise it will generally just be an unadulterated flower biomass product. The other categories, as we look at edibles, sublinguals, vapes, dabbable concentrates, etc., those all require processing, right? And so that really is a bit challenging to get set up and a little bit different there. We definitely, have seen some shifts in this. We mentioned before the vape shift, and we can look at that in the next chart. We've definitely seen with maybe COVID or post-Avali health crisis and what was going on there, some shifts in the category shares. Edibles, continue to do quite well. Dabbable concentrates doing, fairly well as well. But a little bit of a drop off in that vape category. One hypothesis, actually, Michael, do you want to share your hypothesis on maybe one of the drivers for the vape decline because of COVID?
Yeah, well, coming off of Avali in August 2019, we saw a hit to vape pretty much across the board with a little bit of a move to flower. That wasn't hugely. We started seeing that exact same thing amplified a little bit as we went into the COVID lockdowns and saw purchasing behaviors change briefly during that period. We saw vapes sort of continue to slide across that time, where we had been expecting to see a little bit of a revival, and flower and pre-roll grew pretty dramatically across those periods, across a lot of markets.
All right, thank you. All right, and then if we look at Canada, this is also sort of fascinating, the 2.0 launch. So we really saw some changes with 2.0. So that we expect to stabilize and look a little bit more like the US in terms of gradual shifts in category share across the market. But that was a big change as 2.0 rolled out. Question that I see coming in, any information or thoughts on beverages? Beverages are overhyped. They are absolutely an emerging category. They're a small percentage of a small percentage of the categories. So beverages land in the edibles category. And edibles is a minority category within cannabis. Beverages are a very small portion of the edibles category. There are a number of reasons for this, and the easiest one to look at is the supply chain and the logistics of beverages. Beverages are, by definition, very heavy, and they also tend to be very inefficient in terms of space. So if you think about a retail operation, retailers typically measure their success based on dollars per square foot. So how much retail revenue per square foot are they able to generate? Beverages versus dabbable concentrates, for example, is a bad trade-off from a square footage perspective. Dabbable concentrates will come in a micro container. It sometimes actually is funny because the container typically is a bit too large for the dabbable concentrate that's inside it, specifically because the size of the concentrate is so small, it would be hard to pick up. And so it's very easy to stack a shelf with dabbable concentrates and be very, very efficient with your space utilization. Edibles, and specifically beverages, typically are bulkier. And for example, imagine a 6-pack of beverages sitting on the shelf, that's just a lot bigger. And so the price per square foot or per cubic foot, if you will, thinking about a shelf, is much higher for beverages. This goes back through the supply chain. So if you're a distributor, it is much easier for you to distribute, let's say, raw flour or concentrates than it is to distribute beverages. You don't have breakage related to flour. You don't typically have any climate control worries for these other categories. Whereas for beverages, you may have climate control issues, you may have breakage, you may have, even like OSHA issues of people picking up a heavy box of beverages and hurting their back. Where concentrates, you just don't have that same. Now, all of this is being overcome, but it is taking time for the industry to develop the solutions, right? They need refrigerated trucks to distribute this. They need the right insurance in place. They need the right coolers at the retail dispensary to keep the beverages cool so people can consume them quickly after purchase and not have to wait until they get home and put them in the refrigerator for 2 hours to cool off to the right temperature. So if you think about those dynamics, these are the hidden things that are the headwinds for beverages. Now, the flip side of that is the beverage form factor is familiar. It is very predictable in terms of the impact and the experience for the consumer. It shows really terrific flavor profiles. Seeing some of the beverages on the market now, you can, if you want to, you can hide that THC cannabis flavor within the beverage itself. You can have carbonated, non-carbonated, etc. All sorts of really cool stuff going on with beverages. But right now, it is very much on the horizon still as a major category, or in our case, a major subcategory of the edibles category. And we do expect that to be the case for a while, because that infrastructure, I can't overstate how hard it is to set up that infrastructure to support beverages across an entire market and what's going on there.
Hey, Micah,
All
some
right.
quick stats if I can on beverages in the U.S. Just at the top level. So beverages are about 0.7% of the total market in 2021, as according to our estimates, and a little bit less than 6% of the total edibles category.
Thank you.
And a couple questions, comments. Just want to point out, Matt Tolnick makes a very good point that driver of the vape dropout during COVID was that people didn't get to derive value from the discreetness of vape. One of our primary answers to why do you consume these products, discreetness, ease of use, etc., is generally always at the top of vape, and that is exactly the reason. If you're staying home, why not light a pre-roll as opposed to taking hits on a vape pen at a bus station or something?
Yeah, I think that's a very valid point, and discreetness is very much a top 3 factor for cannabis consumers. So without needing that, because you weren't in public with COVID, it does make sense that people shifted to other form factors that were cheaper, more convenient, more enjoyable than vapes. But of course, many of us know, having a handy vape is absolutely one of the most convenient and easiest ways to consume cannabis sort of on the go. All right, other questions?
We have one about Canada beverage regulations. So we do attempt to take into account any upcoming regulations that seem likely to go into effect into our forecast. And so yes, in this case.
Awesome. Well, we are reaching the end of the hour. We have just a couple minutes. If you have any final questions, please type them in now, and we will do our best to address them. If you have questions that come up after this webinar, please feel free to drop us a note. info@bdsa.com is all you need to do, and we will absolutely do our best to respond. Please check out our upcoming webinars as well. We try to do a webinar, every couple of weeks on a topic of interest. And if you have any ideas for webinars, by the way, we'd love to get your feedback and information on webinars that you would like to see us cover. We are the market research firm for the cannabis industry, and our job is to provide data and insights to the cannabis industry. We love being able to speak to really relevant topics that the industry is focused on. So again, please put in your points. All right, questions coming in. Go on. Yes, we can make this webinar available. It is recorded, and we will make that available so everybody who attended as well. And a question on fulfillment methods came in from Robert. So online versus on-premise sales. So with this, we track 3 different fulfillment methods as we discuss them or talk about them. We have delivery, pre-order, and in-store. So if I recall the numbers, and I don't have them right in front of me, so forgive me if I get these wrong, but I believe it is about 80% of sales we see typically come in from in-store purchases and decisions, about 10% from pre-order, and 10% delivery as we're tracking this. Those are imprecise numbers by definition because we don't have full visibility into all those channels. And people make, different decisions as they go. But one of the things that we did see was with COVID, delivery picked up a lot and then fell back a bit. Different markets handle delivery completely differently. It is illegal in many markets, and it was mandated, for example, in Nevada, I think it was. I think it was delivery only during the beginning of COVID. So it was really all over the map as we looked across the US in particular. But one of the things that we've seen is an uptick in the online pre-order options. And there have been, a number of companies really charging into that category. Most interesting question that I think about with that fulfillment is the ability to educate a consumer in the pre-order process. Given that this is a new category, and we also have brand new categories within the cannabis category, it's a really exciting thing to think about that education process online, where you can have really robust educational information about different products and form factors and consumption methods. Typically, that has been done by the bud tender at the dispensary. And frankly, I know many dispensary owners who've commented that that's really brutal because if you have a new bud tender, they may be really overwhelmed and unable to answer the questions. It may consume a lot of time. One bud tender may be better about talking about concentrates than edibles, et cetera, et cetera. And so, standardizing that with the online system seems really exciting and very cool to think about there. All right, with that, I'm going to wrap it up. Thank you guys very much for your time and attendance. I really hope that everybody has a great rest of the day and great week. And again, please reach out with any questions, comments, or ideas for upcoming webinars. Thank you very much.